So hi everyone and welcome to this technical masterclass. So my name is Christy, or as you other guys know me as CreFX. So basically, I'm the co-founder of the MarketNerd and the guy who will mainly be doing technical analysis and working with you. So today, I will be covering market analysis, which includes trade ideas, bias of the week, and a little bit of fundamental outlook. So let's start the call by going to Forex Factory, where we see the calendar of the week. So what we usually do when starting the call on the Sunday, because it's different, we have 4 technical masterclasses during the week. The Sunday one is the one that we prepare the week by looking at the markets, build our bias, and set the trades that we are going to place for the week. Meanwhile, Tuesday, Wednesday, Thursday, we discuss intraday trade ideas in order to take our positions. So to start with, we have Monday. On Monday, there will be lots of news for the 5 major currencies. This is expected to generate high volatility during the day and basically going to benefit the US dollar. So on the Monday morning, so on the Asian session, we might see the other assets pushing higher and only then declining on the afternoon when the reports from the US dollar are released. We see it here, 345. And then on Tuesday, we have German business climate report, which will be released at basically 10 a.m. And if it shows improvement, we can see the euro appreciate against the dollar. But basically all of that will depend on the results, and then we'll see the PMI reports from Monday in order to correlate. And then on Wednesday, we have the CPI quarterly reports from the Australia. Also, we are expected to receive the GDP and other important productivity indicators from China, but the time of the release it's still not defined. And then at 4 p.m. we have the new monetary policy and interest rates from Canada, which could also extend a possible decline from the US dollar, especially after the press conference by the Bank of Canada at 5 p.m. We have it here. And then we go to Thursday. So we will see the new interest rate by the European Central Bank, which is expected to increase by 75 basis points. And then at 2:30 we will have the advanced GDP quarterly report from the US. And this is basically going to heavily benefit the US dollar. At 2:45 we have the European Central Bank press conference led by Christine Lagarde. And depending on the final decisions and the declarations made during this press conference, we could see the market favoring the dollar, and that will send all the other assets lower. And on Friday is another day that is expected to have high volatility, so you gotta be very careful. So we have the monetary policy statement and policy rates from the Bank of Japan, plus the press conference slightly after. And this would benefit the yen during the London session, maybe starting from the Asian session, but mostly on the London session. But the thing is that at the moment these events are listed as pending, but we will receive confirmations of the time later during the week. And then 2:30 we will have GDP monthly report on Canada and the personal consumption index from the US, which are also expected to generate volatility and probably benefit the DXY even further. So now let's go back to charts and let's check the DXY. So basically, when looking at the calendar and the list of the events and the order that they have, my expectations, my bias, to make it simple for you and not very complicated, is that I expect the DXY to start the day on Monday, trading lower just a bit before correcting to the upside, and then during the week drop down to these 4-hour liquidity. So when we look at the current price action, we can simply see, and we have been expecting actually since weeks ago, and some of you that are premium members, you basically know. The main bias we had though, it was that price had to fill this 4-hour liquidity before declining. And we have been seeing that it's basically very difficult for the price to trade up there. And just on Friday, we saw price going and taking out these buy-side liquidity, which for me personally, it's still a liquidity area, even though it took out and then reversed, as we have been discussing what happens after buy-side or sell-side liquidity gets taken out. Still, it's an area of liquidity. So now when it comes to where the price is going to reverse, I have this as an area. I have this price inefficiency that I want to see price trading at. And then by confirming some breakout structures on a lower time frame, like the 50-minute one or 5-minute one, because it's an intraday position, we might see the price correcting. But knowing that there's going to be lots of volatility on the market, I wouldn't be surprised if price just spikes to the upside and then reverses. So basically, I'm just personally going to watch how this reverses without interfering and without taking any positions until price has reached for these levels where we have, if we go on the 50-minute time frame, we have a price inefficiency right here, but on the upside, we have external liquidity. So the thing is that we should know and we should see if price is going just simply to fill this area and then reverse, or fill this 4-hour liquidity and then reverse. So this is the question of the day, which we now still don't know, because we don't know how much volatility the market will have tomorrow and the way it's going to play. And then when price has reached for these levels, we expect the dollar to push lower during the week and reach for this 4-hour liquidity void before taking the next step. So by having this bias, I have been looking at some of the currencies on the markets. We can go first to Euro NZD, which was analyzed last week, since we were looking at this sell side pending order and we wanted to see price come at this level and then accumulate before going for the upside liquidity. The first time it came here, as you see, it didn't give any form of accumulation rather than just a simple break of structure, which is a low confirmation, because we always know that the market can print this kind of breaks many times, like this one, for example, and then just fail. So that's why we should see a proper accumulation of price, which we didn't. And that's why we didn't anticipate. We were waiting for the next day to see a break of this key level before considering any entry. Right after this level got broken, price didn't come to mitigate this level, but traded to the upside by failing to break the previous high of the day when it was just at exactly level. Anyway, it left behind some form of liquidity, but still in these kind of situations where we know that, okay, on the 1 hour, we just got wicks here and not any proper accumulation of price, and now price failed to break the previous daily high when it was exactly at that level. We gotta be more careful before analyzing. But even let's say if we have been still thinking that, okay, it's still a valid area, if we see that price, it's coming by just forming lower lows and it violates the level, It's simply not valid anymore. When it comes to the entry range though, it's still valid. The reason for marking all this level, it's because I've been analyzing on the lower time frames, refining this entry right here. And what I'm waiting at the current price action is if price can give us a break of this level before retracing lower, so we can jump on longs. So basically, I have a long bias, bullish, when it comes to the euro currencies. It's exactly the same thing with EuroCAD. So on Friday, I was explaining how this area, it's gonna be crucial for the price to reverse before considering any other entry. We had a pre-entry though, which didn't work out. Price came back to the entry level after breaking a previous high. But at the current price action, we see price taking out the liquidity and then correcting a bit to fill these price inefficiencies. So far we don't have any break of structure. We can't consider any break of structure. And knowing that we have a trendline liquidity, the move that I'm personally expecting is price taking out this liquidity, first of all, respecting the range by not violating it, and then breaking this key level, 1.3450, 60, let's say, and then reversing before going for this buy-side liquidity. When it comes to the higher time frames, it's bullish all the way, and we have been repeating that many times by now. So let's see how this plays out. This is the area that I'm basically waiting for further confirmations. When it comes to EUR/USD, which we analyzed last week, it was basically a textbook trade for the ones that know how to trade my concepts. And for the ones that don't know, don't worry, because we're going to release the academy in 1 month and it's going to be online for you to buy. But what we had right here, it was simply a takeout of this buy-side liquidity and price correcting. So we wanted to see what price was going to do. Then it generated liquidity here, which later on got swept out, and then price took out the previous day low, which is another entry confirmation. And on the very next day, this that for some might look as an order block, which is basically a short-term low now, was taken out, violated. So this was the entry opportunity, and price traded lower by breaking the previous day low, another sell-side liquidity. So basically every time that price does this, you have to know that it's going to form the next bearish leg. Takes out the next bearish leg. So basically 3 entries for you. And you got to study this setup. I have been explaining as well on Thursday when we had final entry, especially here on Wednesday. Wednesday night, we said that we have trendline liquidity. We want to see price taking that out, going to the premium level, waiting for price to distribute before trading to the downside. And Friday did exactly the same thing. Same scenario all over. So when it comes to the bias, we have the liquidity void, the external liquidity right here. Excuse me. So I'm waiting for price to break that level and just trade below 1.5420. And there is the area that I want to see price accumulating and not breaking this level right here. For some of you, this might be a strange level, and I know that now you might be wondering like, what does he see there? But let's save that for another day. So first of all, I want to see price entering this level, and then depending on the range it has formed, because if we're gonna take the actual range is this one right here. So if I was going to say which is the structure that we need to see getting broken, it's this one. But that will depend on. Because let's say that the market opens like this and then trades lower again, then this will be the structure that we need to see price breaking before reversing. So remember, when price enters this level, you should find who is the highest point of the range and use that as a structure holder which needs to get broken before price retraces at this level, so we get into longs. Then we move on to GBP CHF. On the GBP CHF, we have been talking about the buy side pending orders, which once they got taken out, we had price inefficiency on the downside waiting to be taken out, but still we didn't have the proper confirmations. But when looking at the market structure now, we see that on Tuesday we had a break of previous day low, and we wanted to see how much price was going to trade at the premium level before deciding to decline lower. And that was basically the reason why we didn't want to anticipate very early on the market. I know that some of you would have been seeing maybe this as an order block, but for me that's just price trying to retrace at the equilibrium of the range. Most of the time it's going to play out, like for example, if you would have been entering here, previous day high, you have an order block, you can trade lower, but you can't expect the price to break the range because it has to retrace at least to 0.70 levels, which is the start of the premium levels. So we saw on Thursday, price took out this buy side liquidity and then failed to trade higher by breaking the previous day low, confirming that it is unwilling to trade higher. So now we have a key level which served as the previous day high on Thursday. So we want to see price trading into the same levels and then distributing by breaking the recent low after it has reached that area, and then mitigate before trading to the downside and have as a target this price inefficiency. So when it comes to the GBPs, this is the only currency that I really like, the kind of price action. And then we can move to the USD pairs. On the USD CHF, since we had, remember the bias we had on the DXY, we want to see price trading a bit lower before forcing and then trading low during the week. So having this bias, we can see how it correlates with the other USD pairs. Like for example, USD CHF, we have been talking about it with our premium members last week, that there were two buy side liquidities that had to be taken out before we see a strong market shift to the downside. That's exactly what happened, but Friday was a day that had lots of volatility, not offering at all any small retracements in order to enter. And that's why we couldn't anticipate into shorts. Anyway, when it comes to the current structure, we expect price to trade just below this recent low, mitigate this area 99.50, which is an institutional round number, and this will be the level that we want to see price reacting, accumulating, and showing that it wants to go bullish by providing bullish candle, by providing accumulation, by providing breakout structure, before aiming for this buy side liquidity to the top right here. And you will notice that in some currencies like the CHF or the JPY, there are going to be times that the market is going to decline very hard, like example this one here, and you will be like, okay, so now we have a market shift, etc., etc. So you will get into short positions, and it's good to get. You can benefit something, but do not expect a total market shift, because that's the way how these currencies move. And you're going to see that on JPY as well many times. Because when they trade high, let's say USD CHF, it takes time. And then the market crashes in one day, but that doesn't mean that you have a shift. It's the same thing here. You have a crash and then it goes. It's the same thing here. You have a crash and then it goes. It forms another higher high. So that's why I don't use this area as a reversal area, rather than just an area that might offer another entry into discount price before going for higher highs. So on the USD CAD, it's simply the same thing. We want to see price coming near 1.36000 level, round number, and this is the reversal area that we are expecting. So it's basically an order block which is located right there, just below the imbalance, where we want to see price trading at, accumulating before aiming for these buy side liquidities, which basically are the second target, since the first target would be just this liquidity void right here. And that will be, of course, based on how the DXY is performing as well. And then let's go to NZD USD. It's the same thing here. We are expecting NZD to trade once again higher to enter this key level right here before distributing and going shorts to take out these levels. So when it comes to NZD USD, we said that during the week the dollar is going to be, let's say, kind of bearish, but NZD as well is kind of bearish. And that's why we don't expect price to, let's say, go to 60 level. It's not ready yet. It might go there one day, because when looking on the daily time frame, it has to go into this level, but not yet. At least not this week. So since we had the USD pairs, let's go to gold. So when looking at gold, I'm waiting for this level to be retested once again before aiming for upside liquidity. And as a final target, I expect price to trade at 1,700 levels once again. And basically, all the other assets against the USD are going to be bullish this week, same like the SPX, for example. So when looking on the 4-hour time frame, we see price once took out this sell side liquidity, broke the structure, came back to mitigate this bullish order block by forming another high, by correcting the price. So now that we see that price had a maximum of correction at this level, we might have a new price range once price takes out this buy side liquidity and comes back to mitigate these liquidity voids before going for the next highs. When it comes to oil USD, we have been bullish since previous week, since we mitigated this bullish candle, and we even talked about it with the premium members. And we do expect price coming to fill in this liquidity, this fair value gap, before reversing to the downside. So basically, you see that all the currencies, which includes the USD, so the major currencies, are basically correlated and moving on the same direction. Then we have NZD CHF. We see price violating this bearish order block and trading near a buy side pending order, which I'm waiting to be taken out just before declining to the downside and mitigate this level. The continuation, of course, it's bullish when it comes to the swing perspective, but I'm going to look first of all for a short position at this level, and then a buy position once price reaches this order block right here. And we have a short-term low as well right here. It's basically the same thing on the NZD CAD. On the NZD CAD, we got a 50-minute structure holder, which I want to see price violating it before retracing to the premium levels. So now, once again, when it comes to ranges, we don't know yet who is the highest high, because at the moment is, let's say, this level right here, and we have a failure swing high, which is at the moment start of the range of this bearish intraday small range. But that doesn't mean that price can't open and trade to the upside. If it does that, we'll have the violation of this level, so it will not benefit us. The only way for us to consider this entry is if price immediately opens to the downside, confirms the range, and then retraces to the premium levels before trading to the downside. And then the exit point would be this level right here. For example, since we were talking about JPYs, if you look at the JPYs, for example, you will see that lots of time when the market shifted to the downside, it failed to respect the order blocks. For example, right here, you see this as an order block. You see price violating it. Some people would have seen it as a market continuation to the downside. But what you miss is that price has been accumulating and forming a market shift. And that's basically going to be the equilibrium level, most of the time the 50% of the price range, and you can see that this level right here, just above the 50%. So basically there is going to be orders, but it depends on how you combine and the way you trade and the type of time frame you're trading at. Because I'm going to teach you something very quick. Let's say that you got a range, a weekly one or a monthly one. So now that you have the range, let's say that you have 1,000 pip as a range, and this level has an order block. You have the recent low and you have the previous high. So you know that once price reaches for that level, it would have been taken out of buy-side liquidity, and even though this key level won't hold for the long-term perspective, still you might see that if this range from the 50% to the 0.38 is more than 100 pips, you can simply use this area as an intraday entry level in order to generate a trade of 1 to 5 or 1 to 10 risk to reward, because this is a place where the swing traders are going to enter the market and generate volatility, and you as an intraday trader with small pips as a stop loss, like 10, 15 pips, 20, whatever, can benefit because of the volatility the market is causing. But if you are, let's say that if you are on an intraday range and all this range is just about 40 pips or 50 pips from the high to the low, this 50% level is going to hold for like 2-3 minutes. 2-3 minutes, I give it a maximum of 10 minutes. In 10 minutes, it's going to violate the level. It might give you a 1-to-1 risk to reward at its maximum, but most of the time, it's going to violate the entry. Of course, there are times that price can offer even more. Let's say that there are times that price can really respect the 50 level and trade all the way to the downside, but this is just 10% of the times. So that's why you should know the difference between using these ranges on the higher time frames and avoid using them on the lower time frames. Because on the higher time frames, if you see that, for example, the 78 level and the 50 level, it's about 400 pips. And you see the same thing. The market has been taking out another buy-side liquidity, probably feeling some liquidity voids. You will still see price here reacting. And if the range is on the weekly time frame, or it might be daily, doesn't matter. If the range is quite big and it has lots of pips, it's going to give you that entry. It's going to give you that profit. But if it's on the intraday, range, it's not worth it.